Hello, I'm Richard Watts from Finance for Business. In this presentation, I'm talking about equity investment. Private equity provides long-term committed share capital to help unquoted companies grow and succeed. If you're looking to start up, expand, buy into a business, buy out a division of a parent company, turn around or revitalise a company, private equity could help you to do this. Equity finance is provided by angel investors and venture capitalists. Equity investment could be suitable for a business that answers yes to the following. Does the business have significant growth potential in terms of turnover and profitability? Is the business prepared to turn this growth potential into reality by raising finance on terms which may reduce your equity share in the business? Can the business show potential investors that the business has a unique selling point or commercial edge which distinguishes its products and services? Can the business define exactly why investment capital is being sought and what it will be used for? And will the business help the investor achieve a return on investment and propose an exit route? Is the business prepared to accept input into the management of the company? Business angel finance. Investments tend to range between 10,000 and 2 million. The average is 20 to 50,000 per angel, and angels quite often invest in syndicates. Angels are generally wealthy entrepreneurs. They'll tend to invest in industries where they have had previous experience. Angel finance can be quicker and less formal than other types of equity investment. Many angels expect close involvement within the business that they invest in, and more than 90% of proposals put before angels are rejected. Angel expectations and costs. Most will seek an exit in 3 to 5 years. They'll expect capital growth of at least 25%. The management team will need of the business will need to show significant commitment in terms of finance as well as labour time. Most angels will expect to contribute to the direction of the business. Costs and charges for arranging angel finance are generally 10% of the funds raised. Independent angel networks will charge presentation fees. Success fees can also be charged, and they tend to be between 3 to 5%. Turning now to venture capital. Investment ranges are generally between 150,000 and 5 million, with an average investment of 1 million. Venture capitalists will normally look for at least 20% of equity in the company they invest in. It can be a lengthy process to set up a venture capital deal. Venture capitalists will normally look to have veto rights in key decisions, for example, significant items of expenditure, key personnel recruitment. More than 95% of proposals that go before venture capitalists are rejected. So looking at venture capital expectations and costs. Most will seek an exit in 5 years. They'll expect an annual return of 40% on sums invested. That's often by way of dividend. The management team will need to show significant commitment in terms of finance. Most venture capitalists will expect input into key business decisions. They'll expect to receive a regular flow of monitoring information, for example management accounts. Typical legal fees for setting up a venture capital deal are 20 to 30,000. Corporate financiers typically charge 5% of the money that they raise. The business plan is always key to attracting equity finance. There's some key areas that the business plan needs to address before you would look to attract an equity financier. The marketplace. It's very important to detail the market analysis, marketing plan, the pricing, the distribution channels, the promotion and the competition. How will the product get to market? Where does it stand in the market? Product or service, description of that is very important. Important to detail the competitive edge. What will make people buy your product or service? Need information on the management team. Equity firms invest in people. Therefore, it's very important to detail senior management skills and what they bring to the business. Business operations. How the business operates, its location. Also look very closely and cover research and development and intellectual property held by the business. Financial projections. You'll certainly be looking for a detailed 3 years financial forecast and probably a summary for a couple of years thereafter. The amount of finance that the business is looking to raise, precisely what it will be used for, and also what the exit opportunities will be for a potential investor. Now looking into potential exit strategies. Would be trade sale of the company's shares to another company. Might be repurchase of the private equity investors' shares by the company and or the management. Might be the purchase of the private equity investors' shares by refinancing. Might be a stock market flotation. Or in a worst case scenario, an involuntary exit, i.e. that's receivership or liquidation of the company. Now looking at types of equity investment. There will be ordinary shares. Ordinary shares have voting rights and usually rank last for dividend or in case of a wind-up. For that reason, in some cases an investor might take A ordinary shares, which rank higher in preference to the ordinary shares. Or there may be direct preference shares themselves. Preference shares will tend to have, where the ordinary dividend can vary, preference shares will tend to have a fixed rate of dividend. Or an investor might put loan capital into the business, or it may be a combination of loan capital and shares. There's a wide range of possibilities and each deal is different. So at Finance for Business, how can we help? We provide a facilitation and assistance service to help you acquire equity investment for your business. We'll prepare the business plan in a form required by equity investors or adapt a business plan into that form, whichever is required. We'll prepare an executive summary to submit to equity investors or groups of equity investors. We'll also prepare a summary of the business opportunity to present to potential investors. We'll identify potential investors to approach on your behalf. We'll assist with providing information to potential investors and attend meetings with yourselves and those investors throughout the process. We're there to give advice and assistance throughout the whole investment process. For further information, contact myself, Richard Watts, on 07872 033 804.